MicroStrategy is one of the most controversial companies in the entire world right now. Some people are calling them a Ponzi scheme. You're going to lose a bunch of your money, maybe all of it, if you invest into their stocks, whereas others are saying this is a once-in-a-generation investing opportunity. You have the potential to maybe triple your investment over the next couple months. In order for me to give my take on this company and to fully understand what exactly MicroStrategy is doing, completely different to everyone else, we need to go through how the company transitioned back in 2020 in a moment of crisis from a software company, and they have fully transformed almost into a commercial banking company that is backed by Bitcoin. So without further ado, let's begin looking at this interview between Grant Cardone and Michael Saylor. The full 2-hour interview is in the description down below. Let's get stuck into it.
The lockdowns hit. The politicians make us close the office. Everybody goes home. Google and Apple and Amazon and Microsoft start sniping all of our employees from home. We had $500 million worth of property. It was called Treasury bills. It was unilaterally reduced to a value of 0 per year. And I think Jerome Powell gave a speech and he said very famously, he said, we're not even thinking about raising the interest rates until the year 2024 or 2025.
Right. Repeatedly, he said it.
I didn't need to hear that twice. So I thought I better go find something else to buy other than treasury bills. We settled on Bitcoin as digital gold. We decided we're going to sell our $500 million worth of treasury bills and we're going to buy $500 million worth of Bitcoin.
First purchase was how big?
$250 million.
That was the story of MicroStrategy stock from around March of 2020 through to December of the same year. That's where the company began to sell something called a convertible bond. Now think of a convertible bond as a way of, selling a bond. That means MicroStrategy as a company requires a loan from investors, but a convertible bond has extra functionality. You can transition that bond into another asset. You can attach another investment to it. So in this case, MicroStrategy, instead of just giving investors 6% per year of an interest on a loan, they actually gave them 0, but in return, they gave them pretty much call options on the underlying stock, almost to 0 expense to MicroStrategy as a company, pretty much just getting free money.
I can sell a $500 million bond to a convertible bond investor where I pay them 1%. And you're like, well, why would they take 1%? It's because I agreed to pay you back the $500 million in 5 years, either in cash or in equity at the time. And meanwhile, I will give you an option, a warrant to convert that into $500 million of equity at a 40% or 30% premium to the current price of the stock.
Okay.
So if you have a stock with a volatility of 20, the option's not that valuable. But when the volatility goes to 80, the option becomes extremely valuable.
Explaining the idea of volatility in relation to this convertible bond story. Now, the reason why I said it's almost like Michael Saylor and MicroStrategy are getting free money, a lot of that is tied to the volatility of the MicroStrategy stock. It's almost like they've engineered the volatility in this company, attached it to the volatile asset Bitcoin, but that in itself is giving the company extra free money. So like you just said, there's an implied volatility at MicroStrategies of around 80. The typical stock is maybe around 20 or 30. So what this means for a convertible bond, if a company had to attach X number of call options to the bond, again to reduce that interest rate to 0, well, Michael Saylor only has to attach X divided by 4 to get the same amount of money from those investors. Because the volatility makes those call options, those warrants, more valuable, he has to give up less shares in order to get the same amount of money in return. But the one weak link was the idea, convertible bond, you still have to pay back that loan. Yes, it might be at 0% interest rate or 0.5% per year. So that's Michael Saylor paying interest back to the investor. But at the end of a 5-year term, let's say the loan was for 5 years, he has to give back that couple $1 billion back to those investors, and that still creates a default risk for the company. Let's just say Bitcoin crashed 80%. At the time, these loans needed to be repaid. There was no other investors willing to give a loan to MicroStrategies. There is a good risk of the company going to a value of zero, just totally going into liquidation. In 2024, again, Michael Saylor, with an engineering mindset, he comes from an engineering background from MIT, he thought about, well, how do I remove this default risk entirely?
And we started thinking, why don't we sell preferred stock? And preferred stock is like a bond, but it's perpetual. So I sell you $100 million of preferreds. Means it never comes due. I'm going to borrow $100 million. I'm going to pay you 10% dividend a year forever. I'm never going to pay you back the principal. It's equity. And I approve the dividends. If the company can pay the dividend without being insolvent, then the company pays the dividend. But the board is not allowed to pay the dividend if it would render the company insolvent. Why is the shelf registration important? Because that meant that when we sold the billions of dollars of it, if there's demand in the market at 3:55 p.m. on a Thursday for $50 million of this instrument, someone buys it, we sell it, the price doesn't move a penny, we create the $50 million of credit in the next few minutes in real time.
When MicroStrategy also mentioned that shelf facility, really that again, that's a benefit of being an S&P 500 company. They have the ability to offer these securities to the market. I think it's within a 24-hour period, very, very quickly. If you're a private company or a smaller company, this could take you months and months to do. So you can go ahead and sell these preferred shares into the market for $1 billion, like you just said. You get that $1 billion and you could be buying Bitcoin the very next day. One thing Michael Saylor did not mention in that moment, but is true, is this idea of a Bitcoin yield. This is a metric describing the premium investors are willing to pay for things like these preferred shares. Currently, we're sitting at a Bitcoin yield of 27%. That means for every $1 billion worth of these preferred shares that are given to the market, that means $1.27 billion goes into buying Bitcoin. There is so much demand for these products that bidding up the price, the extra price means they can take that extra profit for those shares. That is an automatic 27% return on those preferred shares. So the company wins, but you as the preferred shareholder, bondholder, or even if you just buy the underlying stock, everyone's winning in this strategy.
The existing 20th century credit establishment, they're selling you stuff that pays you 5% taxable. Okay, well, so there's $300 trillion of that garbage.
Yeah.
Okay, and we're creating something which is 10% tax deferred.
Yeah.
Okay, so it's better.
The preferred shared strategy came into use towards the end of 2024 and has almost transformed MicroStrategies as just being like a hedge fund that buys Bitcoin. They've almost transformed into being an investment bank, selling off loads of these kind of debt vehicles, but they're called preferred shares. And they're even more tax efficient than buying normal bonds or buying normal stocks. These dividends and other returns to investors, again, probably depending on the exact vehicle you buy, those dividends are called a return of capital. In other words, if you buy these preferred shares for $100, it's almost like you're loaning MicroStrategies $100. They pay back a 10% dividend yield. It takes you about 7 years in order for you to receive your $100 back. Only at that point are you seen as having made a profit, and therefore it's deferred taxes for about 7 years. And all that time, Michael Saylor is generating billions of dollars every single month and is plowing that into buying up more Bitcoin. And in the long run, maybe in the next 20 years, whatever the average return of Bitcoin is, 20% per year, 30%. All that time, the value of MicroStrategy, its underlying shares are going up, and it's making the call options that have been given to lenders and through these other vehicles more valuable, again, creating this feedback cycle, giving investors more reason to buy up these different products. I think you're creating kind of two camps of investors here. A camp that just thinks this is a giant Ponzi scheme because Bitcoin eventually is going to crash over 90%. In that case, yeah, MicroStrategies is probably going to a stock price of zero, and all of these different products would also be worth 0. However, if you do believe that Bitcoin in the long run is just going to keep going up over time, then all of these different strategies are going to work. It is going to be a feedback cycle, kind of like a leverage bet on Bitcoin. Whatever the return on Bitcoin is per year, so X%, MicroStrategies is probably going to go up 2x or even 3x. I have actually started a position, a pretty small one, in MicroStrategies in the model portfolio. This is going to be one of my more high risk, high return investments. And I've also added in some call options for Robinhood and Meta. I just see this moment in time right now. We've had a bunch of volatility. I do believe we are going to see a Christmas rally, get a giant return on these investments in a short period. So I'm taking high risk, but not for very long.